Thank you, Sam, for taking the time out to join us today.
Thank you.
I was telling our market analyst yesterday that it's been quite an eventful year. We saw quite a number of market events. We saw MTN, Airtel coming to the market. We saw one acquisition, I think it was a Crown Flour Mill acquiring Dangote Flour. So a number of market events. But of course, those headlines that caught investors' attention was the fact that we still saw less than strong confidence in levels of confidence in the market. Of course, it was an election year, so it was just a lot that the market had to deal with this year. But what are your thoughts?
So yes, you're right in the sense that we saw MTN listing its shares, we saw Airtel listing its shares, we saw the Olam Dangote transaction, we saw the Setplat transaction with Elan. However, all of that didn't lift the market as expected. We started the year at about 30,000 points. We're ending the year right now, we're somewhere around 26,000 points. And so you have about 15% thereabout down in terms of year to date. Because the market has really suffered from the macroeconomic issues. It's beyond the market. It's not just about the market itself. There are deeper issues with the whole economy. You realize that this market has been driven mainly by foreign investors. And once you begin to have macro issues, once you begin to have issues around how they perceive the country, foreign direct investments and foreign portfolio investors are the first to pull out. And once they do that, then such a market that doesn't have depth in terms of local content, if I may put that, begins to suffer. So it's beyond the market. You would say the NSE has performed relative to how the economy has performed. It's a barometer of the economy.
So, but then for investors who are telling themselves, okay, let's just write this year off. It was an election year, and many of the headwinds that came into the market were perhaps to be expected, as it were. That late pickup, due to politicking and, of course, getting a new cabinet, getting government to actually begin to work, took a toll on the market. But then going still on the macro side of things, some of the new policies we're seeing coming out from, especially from the fiscal side of things, the increase in VAT, which will expected to help boost government revenues to feed into CapEx, capital expenditure, the new finance bill, all of that geared towards, and the production sharing contracts, all of that geared towards in boosting revenues for the government, because obviously we need to see better performance of the budget, which is now, according to, with it being passed now, we're now back to the January-December cycle. So from an economic point of view, from a macro perspective, is that laying a solid foundation for the market to say, okay, we can perhaps have more confidence because it looks like from a macro level or perspective, things are looking a little solid, and maybe we can proceed back into the market. I mean, is that that would be a positive.
It would be. I would say that returning or taking us to January, December budget cycle is a positive. I mean, I think this is the first time we're doing it since 99. And it's kudos to the government, and it's a positive that we are back to January, December. And I saw the minister's statement where she insisted that from the 1st of January, we're going to be dealing with 2020 numbers. And that's fantastic. I think that's a good thing. So if you look at the finance bill and the issues about taxation, well, truth of the matter is that government needs more money. And so for government to get more money, it's going to have to tax individuals and corporate entities. And of course, when your tax goes up, what happens? Your disposable income reduces. When your disposable income reduces, you have less to invest. So from a market perspective, from a narrow perspective as to the market, I do not see how all of this will make the market better immediately. However, maybe on the long run, when government begins to make more money and government begins to spend more on the capital side of its expenditure, and then there is the multiplier effect of government expenditure on capital that feeds back to the whole economy and then helps to boost household income and then helps to boost investments also that will help to boost the market. But on the immediate, in Q1, I do not see how taking more taxes from people is going to help the market. On the long run, it might, especially if we continue to be fiscally disciplined and continue the same trajectory and not do a flip-flop on these government policies.
Now, looking across the market, obviously we know that the consumer goods sector didn't do too well this year. The retailers did have a rough time, as seen in their earnings for this year. But what are you optimistic about? The sectors you're optimistic about next year? We're hearing perhaps a possible 70% LDR for banks next year. Well, that remains to be seen. But I mean, what are your thoughts?
So always, I'll bet on the banks. The banking subsector has always done well. The banks have a way of reinventing themselves regardless of policies that come out. If you look at, if you go way back to when we even started banking consolidation, to all the policies that CBN bring an increase in capital adequacy ratio, all the things that CBN has done, the banks weather it and still find a way to make very decent profits. So I will always bank on the banking stocks. Also, oil and gas, the upstream. Now you have relative peace, or a lot of, well, I'll not say relative, but peace in the Niger Delta, and so production is ramping up. We're able to produce and export more of crude, and so the companies that are involved in all of that are listed on the exchange. You expect them to continue to do well. Yes, we don't know where the price will go, but I see it hovering somewhere around the $60 mark. But as long as we're hitting the $2 million barrels mark per day, then I think the oil companies will also do well. So I'd say banking, I'll say oil and gas.
Let me take it for the banks. From an earnings outlook perspective, are you optimistic bank earnings for 2020?
Yes. Like I said, the banks have a way of reinventing them, especially the tier one banks. They have a way of reinventing themselves. So now we know they have to give out more. And really, I don't see anything wrong with what CBN is trying to do in making banks lend. That's what banking is. Banking is about intermediation. You take from those that have, and you lend to those that need it, and you take a spread. So what CBN is saying, go back to your core business. Don't let us look at the P&L of a bank and see that the major earner is treasury activity. That's what CBN is trying to prevent now, to say, okay, you know what, lend money. And the more banks can lend, the more people have access to capital. And in terms of the whole conversation around capital formation, and then you're able to expand your business, right? So I think that the banks, all they need to do right now is to now go back to risk management. That becomes, for me, that becomes topical. The banks that can effectively manage their risks will be able to survive in the near future, because the more loans you give, the more likelihood that you're going to also have non-performing loans, except your risk management profile is the right way.
What about, we have about a minute, 30 seconds left, monetary policy side of things for next year? We've seen the CBN engage in numerous intervention schemes, especially also in the banking sector. What are your expectations? Inflation, we're at 11.6, that could go up. Seasonal for this
11.8
year.
11.8
actually 11.8 seasonal, but I'm just thinking where treasury bills are right now versus inflation for next year. But what is your outlook and what are your projections?
So quickly, I think that in terms of treasury bill rates, they're quite low, so you have negative returns, so people have to find alternatives. And there's so much that you can do. Then again, it speaks to also about capital formation, about the fact investing in the right thing and not just looking at playing the yield curve. On the inflation side, with the closure of the border and the seasonality, I think that inflation will continue to go up. 11.8, I think that early next year will be at 12%. So government has to rethink the whole decision to close the border and to think in terms of the advantages and the disadvantages.
But that's something the CBN, is in support of. The fact that, yes, we've closed the border and, focusing on the benefits, boosting local production. We've seen local rice production increase, and the CBN is targeting some major cash, I think 10 of the major cash crops, and appears to be comfortable with the border closure. But then obviously there's been that negative effect on inflation at 12%. I remember that CBN is trying to get down to its target band of between single digit 9, somewhere around 9%. I'm just wondering, how does that now align with CBN's strategy to bring it down to single digit?
Well, for me personally, I'm not in support of closure of the border, and it's simply put. And then again, whenever the conversation around closure of the border goes around rice and all of that, it begs the question for me. If the reason we closed the border was the reason the government gave because the other nations are not following the ECOWAS protocol and you're going to insist that they follow the protocol, then fine. You push them to that. But if it's about importation of rice or any of those things, remember, rice has been banned. It's been smuggled in. So if you shut the border, how does that stop people from smuggling? I get the sense that people who smuggle do not come in through the borders that you have closed. They come in through other means. So the fact that you shut the border, are you saying that rice was coming in through the border regardless, even when it was banned? Then that's a problem you have with the customs. So it doesn't matter whether you close the border or you open the border for rice and other cash crops. I don't think so. I think that we should open the border, but insist that the nations around us must follow ECOWAS protocol.
Okay, absolutely. Sam, we'll leave it there. Thank you for talking to us today, of course, sharing your thoughts on highlights for the year. That was Sam Chidoka. He's the Managing Director and CEO of Kairos Capital, sharing his highlights of the markets, of course, and all the macroeconomic issues this year.